here are your hosts of Financially Tuned, Mark Fricks and Tony Shore.
Welcome to another show of Financially Tuned with me, Mark Fricks, with Master Plan Retirement Consultants, and today with Tony Shore, our co-host. And we are really excited that you've joined us today because we have a great show coming up. We're talking about a subject that is near and dear to everyone's heart, and that is taxes. More importantly, how to reduce taxes, especially as we approach retirement. So, Tony, how are you today?
Well, I am great. I'm feeling good. Had a great week. And last weekend was Memorial Day. Had fun. I'm doing good. How about you, Mark? I haven't talked to you in a few days. How have you been?
Been really good. Well, we were able to take some time off from Memorial Day and just chill with the family. So that was really nice. Our daughter's in town from Los Angeles, so having a good time with her and just having family time. That's what it's all about.
Well, yeah, that's really important. And, you mentioned our topic for today was taxes. And before all our listeners tune out, I want to tell you that today Mark has something special in store for us. And this is one of his specialties. This is an area that Mr. Fricks here really excels in. And again, Mark, thanks for having me on the show with you. And I'm looking forward to it because we're going to talk a little bit about taxes and IRAs and how Roth IRAs can help and when you might need that, when you might not. And there are a lot of things that people don't understand and a lot of misunderstandings out there, I think, about this topic. So do you have clients and people that meet with you ask about this topic a lot? Do they want you to discuss their taxes with them as part of their financial plans or retirement plans?
Well, surprisingly, Tony, not as often as you would think, because I think a lot of people, when they think about retirement and retirement planning, they're thinking about investing and income and things of that nature. They don't really think about taxes, but then we bring it up and suddenly the light goes off. And I think they then realize, every dollar that I pay less to Uncle Sam is another dollar in my pocket, which adds to my retirement income. So suddenly it does become more important and kind of shoots to the forefront. And so, it's interesting that a lot of folks don't think about that. And I think it's because, the American public has been kind of conditioned to think about financial professionals as investment people. And of course, that's what most investment professionals are, is they were brokers and advisors and they just want to invest money, and that's kind of the sexy thing to do, and hey, this is what I made this year and this is what we didn't make this year or whatever, and they kind of ignore the other dozen or so areas that are an important part of retirement planning. So I think taxes kind of get pushed to the side, but we have made it our point to become trained in taxes as it relates to retirement planning. I want to make it clear, I'm not a CPA. Personally, I'm not an accountant or anything like that, but we do have CPAs on our team that we consult with and that consult with our clients. And again, because we have received a lot of training in taxes as it relates to retirement planning, there's sometimes things I know that our CPAs don't know, just because I come at it from a different standpoint when it comes to planning for retirement.
Well, that's interesting. And you know something, Mark, I assume that all of our listeners, as well as your clients, they all want to save money and pay less in taxes. I mean, I know I do. That's for sure.
That is a common trend. That's for sure. One of the fun questions I ask Tony when I'm on our initial interviews with with folks that come in is about halfway through the chat. I'll ask them, I'll say, well, how do you feel about income taxes? And, it's kind of a funny question, but I love to see the reactions. Sometimes people look at me kind of weird, like, well, how should I feel about them? Other times they cuss or throw something. Other times they're like, I pay what I've got to pay. But it's really fun to ask the question and see the reactions. But it really tells us a lot when we ask that question. If it's something that people have really had a problem with in the past, or they've really felt like they've paid a lot of taxes, it does become more important to them. And it's also interesting, Tony, when we're chatting with somebody, when they really feel like they pay a lot in taxes, it probably means that they're either self-employed or they have a position to where they have to write a check Uncle Sam. It's one thing if you work for a company and they deduct taxes, you never really see it happening. But if you have to stroke a check to the IRS once a quarter, it's a little more painful, and so that becomes, I guess, more of a realistic episode in our lives when we actually have to cut a check.
Yeah, definitely. In fact, I've been in both of those situations myself, Mark, and I can tell you that if you're self-employed or a contractor, cutting that check once a quarter, that's a tough one. Or even once a year if you owe money. Even if you have a regular job but you owe, cutting a check to the IRS is not a fun thing.
No, not at all. Not at all. And just continuing on that trend there, Tony, a couple of things too. There's two things to think about when you think about taxes. There's looking backwards. In other words, when we report our taxes, that's kind of when we do our tax returns. A lot of folks use a CPA or an accountant to do that. Sometimes we purchase software or go online and do that, and that's basically just history. That's reporting history, and that's really not what I'm talking about here. I'm talking about the second part of taxes, and that's looking forward. What can we do in the next year, the next 5 years, and even the rest of our lives to cut our tax bills? And that's where tax strategies come into play, and that's where we really, earn our money, is when it comes to looking forward. How can we cut that tax bill so that we have more money in our client's pocket to spend for retirement?
So what's a specific option or opportunity that our listener out there who might be thinking about retirement, or maybe they're already retired, what's something they can consider that's out there to help them save on taxes?
Well, one of the big savings accounts that you can use that are very tax efficient is the Roth IRA. And just a brief explanation without getting into a lot of details. There's a regular IRA and there's a Roth IRA. And the basic difference is this, is a regular IRA, just like your 401k at work, when you put $1 in, you actually put it in before taxes. So that's money that actually doesn't count toward your income. So the more you put in there, then the less income shows up on your taxes. So you get what is called a tax deduction for putting money in there. And then it grows tax-free. But the flip side of that is once you start taking money out, that's when they collect taxes. So you've grown this IRA or 401k over a certain number of years. It's become a big nest egg. And now as you start taking money out in retirement, that's when you start paying taxes at whatever income level you're at that point. The flip side of that is the Roth IRA, and that's the one where you do not get a tax deduction when you put money in. In other words, if you put $1 in, it's after taxes. You've already paid taxes on that dollar. So that's the negative part of the Roth, but the positive part is you never pay taxes again. It grows tax-free, and then when you take money out, it comes out tax-free. So it's a very powerful option for folks, and something we certainly discuss with our clients when it comes to retirement planning.
Sure. Well, Mark, what if somebody has a traditional IRA and they want to convert that into a Roth IRA in order to glean from the Roth IRA's tax benefits? How does that work?
Well, that's certainly almost always an option for our clients, only because we want to diversify our tax holdings when we reach retirement. There are 3 ways to count money when it comes to taxes. There's taxable money, and that's money that's just in a checking account or savings or CD or a brokerage account that you pay taxes as it grows. And then there's tax deferred, which is IRA. Then there's tax free or tax efficient, which is the Roth. And so when folks come in to see us, we have certain software and certain reports we'll run that will help them see, first of all, how they're set up, how much of their money do they have in each of those categories, and then what would it cost us to convert some of that money to a Roth. And so, it's simply a matter of figuring up the taxes on what it would take to take that money, go ahead and pay some tax on it to get it out of the IRA and move it into the Roth. It's a Roth conversion, and we can tell you exactly or pretty close to what the tax implication would be, and and then decide whether to pull the trigger or not. And just, we come up with a strategy. It's not something that you just want to walk in to a bank or a brokerage and say, hey, I just want to convert all my IRAs to a Roth. You may get a surprise when it comes to tax time. So you certainly want to have a strategy, have a plan as to how you're going to do it, when you're going to do it. Maybe you want to do it over a couple of years or a segment of time. Maybe you want to do it a certain year when your income is lower, so to push down that tax event a little bit. But you've got to have a plan, a strategy as to how you want to pull the trigger.
Well, that sounds great, Mark. Now, we're actually out of time for this first portion of the show. We have to take a quick commercial break. Is there anything you'd like to share with us before we do it?
Well, I just want to remind folks, when it comes to preparing for retirement, taxes really need to be part of that equation. And what we find is a lot of planners out there are not discussing the tax portion of retirement planning. And I tell you what, you can lose a lot more money in taxes than you can in the stock market if you're not careful. So I would say if you want to chat about that, give us a call, 770-980-9262. We'll certainly be glad to set up a time to sit down and talk about your situation and some of the directions or some of the strategies you may want to consider. If you'd like more information about us and what we do, I would visit the website. It's found at masterplanyourretirement.com, and it's a great way to find out more about what we do and more about how retirement works.
All right. Well, thank you so much, Mark. We're going to be right back with more from Mark Fricks on Financially Tuned after this.
To hear the rest of the show or for more information, go to masterplanyourretirement.com or call Mark at 770-980-9262 to schedule an appointment.